Hello and welcome. You're watching Business Today. This is Aastha Chopra. Well, now the assumptions have been started. What will come in 2026 related to financial markets, and here we are today in a very good event, which is hosted by Kotak AMC of Market Outlook. How it's supposed to look in 2026. We have a very special guest with us, Mr. Nilesh Shah, who is the Managing Director of Kotak AMC. Thank you so much, sir, for speaking to us. It was a very descriptive, very innovative event which just took place. So let's start with that. What outlook are we looking in a broader picture? If you can explain to our viewers a simple message to the investors of mutual funds or anything you can portray on the plate.
Sure. So calendar year 26 is starting on an optimistic note. Global growth will slow down, but there will be fiscal stimuluses all over the world as monetary stimulus takes a back foot. Indian economy will be fastest growing major economy. More importantly, corporate earnings growth will move from low and mid single digit to high single digit to low double digit. As earnings grow, expectation of better return from stock market in CY26 over CY25 is reasonable. We believe other asset classes also will continue to do well, including fixed income and precious metal. So net, a positive year for investors.
Okay, so you also mentioned that the equity returns in the FY26 are likely to be anchored in double digits. So what other assumptions are we looking that Indian corporation profitability to sustain this momentum?
Essentially, government is taking many steps on reforms. RBI has eased a lot of regulations, and so are other regulators. We are also seeing money being put in the pockets of citizens. Taxpayers will have about 1 lakh crore every year from tax rebate. The GST cuts will put 48,000 crore this year, and next year 96,000 crore in the pockets of consumers. Yeah. The government employees will benefit from the 8th pay commission, likely to be announced in 2027. But effective 1st Jan 26. EMI burden has come down as interest rates have come down. That's putting more money in the pockets of borrowers. And even banning of gaming will leave more money with speculators. Put together, all this money will be spent on consumers. Hopefully, it will be Swadeshi goods and services. And that will create growth momentum for India Inc. to move their earnings from low single digit, mid single digit to double digit.
So we are addressing the market outlook of 2026. So we have to address the elephant in the room, which is the international tensions between the tariffs and much more. Basically, when it comes to rupees and something, how are we looking in 2026? Will it be better? Will it be worse?
We'll have to hope and pray that it is better. But all the tensions of 25 will be carried forward in 26. Our relationship with our neighbors are going to remain on tenterhooks unless until they change their way and give up on terrorism. The tariff deal remains elusive. We have been unjustly targeted with 25% punitive tariff for import of Russian oil. We are not the largest buyer of Russian energy. China and European Union scores way above us. Countries like Poland source a significant portion of their energy and gets exemption. We honor American sanction on both Iran and Myanmar, which China routinely sidesteps, and yet we have been put on punitive penalties. So the geopolitical risks are likely to continue. They are not going to go away, and which is where it is so important that we flourish our domestic economy.
Okay, so we have to hope for the best for especially the international tensions which we are looking for. Obviously, one thing I wanted to ask for my understanding as well. So which one of your theme of 2026 outlook, financial services, consumption or digital acceleration, do you think that markets are underestimating and will grow apparently?
So there's nothing powerful than idea whose time has come. Yeah. And to us, all these sectors' time has come. The banking sector will do well because valuations are reasonable. NPA cycle is on the lower side. RBI has relaxed operating guidelines and liberalize them on the lending side. Put together, this should result into NIM expansion. On consumer discretionary side, money is being left in the pockets of consumers, taxpayers, borrowers, speculators, and government employees. That should also push consumer discretionary. On the digitization, again, the whole economy is driven by digital side. Productivity gains happen via digital side. So that acceleration will continue. These are all the things which are multi-year theme and should continue.
Okay, so before I let you go, just one last question I want to ask. The RBI's new liquidity norms, of course, have boosted the credit capacity for all the sectors. Will Kotak use the additional headroom to chase the stability in the balance sheets?
So that's more applicable to the bank. I run mutual fund. Yeah. And overall, we believe banking sector will take advantage of the opportunity available as RBI has increased their capital market exposure norms, given them permission to fund mergers and acquisitions with certain caveats. These are all higher yielding opportunities, and banks will certainly take advantage of that, which is why we have a positive view on banking sector.
So just one brief line on the how mutual fund outlook will we see in 2026?
As long as we serve our customers well, help them achieve their dreams and aspirations, we will do well.
Well, thank you so much. It was wonderful insights you gave to investors and the viewers as well. Thank you, sir, for speaking to us, and thank you so much for inviting.
Thank you.
Thank you.